recovered, and if we measure it from the bottom of the dot-com crash, it has increased over almost 1,000%, but it has increased over 803%. So that's why long-term investors never fail, only emotional sellers that sell, because the news fear-mongers you into selling. A $5 contribution over 35 years with 20% interest rate over 35 years will increase the interest to almost 200K. UPS been showing great love to me. UPS also had a deadly plane crash, killed 9 people. These are some of the strong products they released throughout the year. That's why I'm saying no one is releasing this many great products as Robinhood. They're launching their products in Japan now. Not only that, they're expanding their footprint in Canada. What's good, YouTube? Man, I'm glad to be back. Why is Disciplined Diamond Hands glad to be back? Well, I'm glad to be back because I get to help y'all build wealth passively. No physical labor is needed, and there's no cap on salary, and it will erase the wealth gap. Some of the cons, man, it takes $1. That's pretty bad. You have to read, be patient, and have discipline. That's pretty bad as well. And money can only buy temporary happiness, because everything's temporary, because money can't make live forever. So it can only buy temporary things. But let's check this out, man. First thing first, I'm not a financial advisor, but I do have disciplined diamond hands. First thing first, no market crash has ever made the long-term investing strategy unprofitable, because the stock market has been growing since the 1800s. The only thing that caused the market to be unprofitable is emotional sellers and buyers that's selling out of fear or buying out of greed. And also another thing that makes people unprofitable is letting the news fearmonger you into selling. A $5 contribution over 35 years will amount to $2,100, but a 20% interest rate over 35 years will increase the interest to almost 200K. So you can literally make 200K in 35 years just by investing $5 a month. We're gonna go over some strategies and some investing strategies on how to do that. Basically what this board says, we're going to go over how to do that. Why does the market turn red? Why does the market go on sale? Why does the market create buying opportunities? Why do people promote buy low, sell high? Well, the market turn red due to earnings. If it's some bad earnings, even good earnings, stocks can go red on good earnings. Overvaluation, if things become overpriced, overvalued, just like cars or houses, they become overpriced. It all comes down. So any asset that becomes overpriced over time will go in the correction phase. Inflation caused stock market to pull back. Economic growth concerns. We're going through a lot of economical growth concerns right now with job layoffs of all kind of things, political wise. Also, what makes the market red is geopolitical tension that's going on right now. And because the sky blue, that's why the market go red, because it's another day that assets fluctuate in price, because gas fluctuate in price as well. What I'm going to do within this video is explain my buy zones on quality companies like SPY, SPXL, Robinhood, UPS, and FI. And we're going to go over the action steps to make sure that we focus on the pros of investing. So first thing first, let's go over this SPX index. What is the SPX index? The SPX index holds the top 500 companies in the world. What are the top 500 companies in the world? Let's go check that out real quick. The top 500 companies in the world consist of Nvidia, Apple, Microsoft, Google, Amazon, Broadcom, Meta, Tesla, Berkshire Hathaway, Eli Lilly, JP Morgan, Walmart, Oracle, Visa, MasterCard, Netflix, Johnson & Johnson, Costco, Bank of America, at AMD, Home Depot. The top 500 companies in the world consist of these, McDonald's. So in order for the SPX index to be doing red, a lot of these companies have to be doing red and be doing terrible, which they are, because it's a lot of geopolitical tension going on, and it's a lot of uncertainty with economic growth going on. But as we all know, every time the market pulls back like it did during the president inauguration, during inflation, during the pandemic, during trade tension, during oil price uncertainty, during the global financial crisis, and during the dot-com crash, the stock market has always recovered. And if we measure it from the bottom of the .com crash, it has increased over almost 1,000%, but it has increased over 803%. So that's why long-term investors never fail, only emotional sellers that sell, because the news fear-mongered you into selling, or you was too greedy and you bought at all-time highs. But what we're going to do, we're going to zoom in and we're going to go over where are some good buying levels at. But yeah, a nice healthy pullback would be right here at 5%. This is the 5% area where I definitely be adding it. 10%, once again, a correction zone. This is where I'd be buying it. And anything above 15% to 30%, 20%, I'm going crazy, especially at the 200 EMA. Because if we can look at the 200 EMA and analyze what price does at the 200 EMA, this circle here, it always bounces, as long as with the RSI. Once it becomes oversold on the weekly time frame, we see what happens right here. And yeah, that thing ripped. The last time it touched it, the 200 EMA, it ran up 31%. So the next time it touched the 200 EMA, it's going to run up even more, because the stock market always increases over time. So that's where I'm going to be buying the SPX at. Definitely at the 200 EMA, definitely oversold on the RSI. I got to sell everything and throw everything at it. Throw a brick wall, let it sell your cars, sell your house, sell all your clothes, sell your shoes, and throw a brick wall at it when it falls at the 200 EMA, or if it fall over 200%, because I am. The SPXL, what is the XPXL? It is the same thing as SPX, but it's a leveraged ETF that grows 2 to 3 times as fast as the SPX. So why would I go crazy in here? Because look, once this fall back at the 200 EMA, it'll grow 45% potentially at if once it reach back to all-time high. The SPXL index move 2 to 3 times as fast as the SPX index, but I'll only buy on a pullback, because if you buy at all-time highs, you're gonna get burnt. Now we're gonna get into some of the stocks I will be buying. First thing first, I need to go over my bad for not posting in 1 week a video, because I was moving, as you can tell, the background different, as you can tell. I'm not in a recliner no more. I'm in a comfortable, colorful chair, but hey, the recliner was still fine to me. But yeah, let's check out these quality companies that I'm gonna definitely be adding more to on the deal. First thing we got is UPS. UPS been showing great love to me. UPS also had a deadly plane crash, killed 9 people, so that's bad as well. But their stock, we're on the stock side, but their stock is holding this demand area right here. And the lower they fall, the more I pour into them as well. So I entered UPS right here around this 82 level, and my stop loss is always 30%, because it's never a need to risk no more than 30% on equity trades. Why? Because if you risk it more than 30%, that means you bought too early, or it's a risky company. If it's speculative, I give it more room to breathe. But if it's a blue chip company and it's falling more than 30%, that means you bought too early, or it's very, very trash. You feel me? And yeah, so stop doing that. Stop buying trash stuff. Because if you buy a trash company, it's not an investment, it's a donation. Because you're giving away your money to someone that is not even profitable with it. Let's go over UPS earning release and see if UPS is actually great and profitable. Let's check them out. Well, if we check it out right here, we can already see that they beat earnings, but we're going to go into why did they beat earnings and what are some of the great things they're doing to continuously grow as a business and as a company. Let's check out some of their highlights. Check this out. Their revenue increased 5.9%, driven by 4.8% increase in average daily volume. Operating margin was 14.5. Also, what makes UPS great is they beat their earnings and their estimated revenue. They estimated to bring in 20.8 billion. They actually brought in 21.4 billion. The next company we have on the list is one of the best investing platforms, and the one I've been using since 2019, and the same one I've been invested in heavily since around like $60. And yeah, I'm gonna definitely be added to the dip on them because they did great on earnings, and we're gonna go over what they said on some earnings. But man, every day I fall in love more with Robinhood just because of how they're advancing and how they're upgrading their platforms every day and how they're expanding their profits and revenue every day. Let's go over some things that they did in their earnings. First thing first is they doubled. Last quarter they made 989 million. This quarter they brought in 1.2 billion. So they crossed that on a quarterly basis. They beat their earnings as well, and their profits are just expected to grow. And we're going to go over why they're expected to grow. And let's go over where I'm going to be buying them at on the dip. In this zone right here, this is a good buy zone. Yeah, Hood is definitely, I'm going to definitely add to them in this zone right here. I'm not going to go too crazy though, because yeah, I don't know about this market right now. I'm already heavy into them, but I don't know how, I want more things to settle before I throw it into it. We gotta make sure things are holding support before we just throw it into it. Let's check out Hood earnings though. Hood released earnings. They released the great earnings. One of the worst or the bad thing they said was they CFO retiring, but it's all cool because they got a good CFO that's right behind them in line. But look, check this out. Funded customers is growing. Their gold subscribers are growing. Their total assets throughout all their platforms is growing. Q2 they had 279 billion on their platforms. Now they got 333 billion on their platforms. Net deposits are increasing by the billions as well. Their net revenue is increasing by the millions. Their operating expenses is increasing. That's just because everything else is increasing along with the operating expenses. Their EBITDA is growing. Net income is looking great and growing as well. These are some of the strong products they released throughout the year. That's why I'm saying no one is releasing this many great products as Robinhood. They released over 10 great products. This is one of the best investing platforms that has released over 10 great products that's getting millions of users and that's bringing in millions of dollars worth of profits. I love the active trader platform. I really love it. I also love their new update to their news on the app as well. And they coming out with a lot of things like with banking. They really expanding in the banking industry as well. They expanding with credit cards and cryptocurrencies, and eventually they will be into the private equity market where we can invest into private companies on Robinhood. So that's gonna be great as well. The next thing we have on the list is FI. Why is FI 5? Well, they missed earnings, but they fell down to a macro support level that they've been holding over the past almost 5 years, but since 2018. Not only that, they're oversold on the RSI. The last time they was oversold on the RSI, they went up over 212%. They did miss on earnings, but they are making great acquisitions like FI. Let me go to their earnings real quick. FI, not only are they in America, but look, check this out. They're launching their products in Japan now. Not only that, they're expanding their footprint in Canada. So they're really going global with their business. They're really going global with their revenue. Is going to keep bringing in more and more money. Check out all these highlights. Check out all the highlights. Check out this RSI level though. Every time it gets below that 30 RSI, we see what happens. But yes, these are some of the 3 holdings I'm going to definitely be adding to on the dip. And this is definitely where I'm gonna go shopping at when SPX and XPXL hit those 200 EMAs.